Well, happy Tuesday, September 3rd. Hope everybody had a great Labor Day weekend. I want to start looking at some of the data that is shaping up the market as we enter September. I think this is going to be a pretty important month as we round out the year. This is the first time that the Federal Reserve is going to be making an announcement to lower their federal funds rate. They'll do that in a few weeks. They've been holding that high rate for over a year and a half. So I think that will have maybe some psychological impact on the market. And second, of course, everybody is now back in town. And this month is typically when folks that want to buy something before the end of the year start ramping up their search. So we don't have that data yet. We're going to see how the buyers in September and October start influencing the market. But we're going to start with July. So we're going to look backwards a little bit. July typically is reflective of what buyers were doing in June. And so looking at number of home sales in the market, we're the orange line for 2024. And you can see in July, boy, pretty identical to the activity that was taking place both in 2022 and 2023. All three of those years, we already had high rates. High rates started in April 2022, and you can see the big drop off. That's pretty equal. So at least in terms of number of home sales, we're seeing some consistency there. Sales volume is the amount of dollars total, and pretty equal to what we saw last year. Median sales price, we saw a significant drop off earlier in the summer, but as the prices come down, we're seeing it start to flatten and stabilize here in the market. And I'll show you that in August as well. But we're seeing the median sales price, again, a little below last year, but nothing significant. Average sales price, same story. And this is for the 5-county area. And then total listings, we're starting to see the peak has passed, and that is starting to round off. Remember, we're already now over here in September, but for now, we can already see the top of that bell curve, and I'll show you a chart in a minute showing that in more detail. Months of inventory, same story. That is how fast are homes selling. The months of supply just starting to peak out as we got into July. This is Williamson County to the north. Number of sales, again, pretty consistent with last year. Saw a little uptick in July. Sales volume, dollar amount, again, just a hair higher than last year. Median sales price, neck and neck, identical to last year to the dollar. So again, Williamson County didn't go up or down in price. This is not specific to a particular home. This is just for the market, but Williamson County is pretty stable. Average sales price, again, very neck and neck. You can see the pattern here. Where are we landing? Where's the market starting to stabilize? In this kind of mid-4 range for the median values. And again, total listings were starting to round off as we got into July. Same with months of inventory. This is Travis. So this is, of course, Austin and all of the suburbs east and west of Austin typically. Number of home sales was down. It was very anemic. The prices are higher in Travis County because of the Austin, core Austin part of the market. And so again, a drop in sales there and fewer new builds as well. Sales volume down. Median sales price down, not a ton, but about 15,000. Median sales price was down, but again, staying in that above 500,000 range. Average sales price neck and neck. And total listings already starting to round off. So that was Travis County. Months of inventory, same story. Finally, Hays County. This is to the south. Number of sales way up. Here's last 2 years. Here's this year. Number of sales almost 50 more in July. Sales volume higher. Median sales price though was down, so more sales, but the prices were a little softer. Why? Well, to get things moving, the price kept coming down, but it attracted more people to buy, especially in Kyle and Buda. Average sales price, not too far off, but down maybe 5 or 10 grand. And total listings, again, starting to round off. Same with months of inventory. All right, let's take a look at mortgage rates. This is as of this morning, September 3rd. They'll change usually around midday, but we ended last week at 6.43, a very low rate. We've only seen slightly lower in the last 2 months. I think we got to 635, something like that. But we're very close. And remember, the Fed has not announced their drop yet. So we're already starting the month below 6.5%, which is a huge improvement over where we saw rates earlier in the year, especially the second and third quarter, where we spent the entire time above 7%. We're now below 6.5%. And I expect we'll see that trend at least hang in there, if not continue to soften as we go through the rest of this year. All right, let's look at some data in real time. So this is as of right now. green is number of houses on the market, single family homes. And you can see we peaked out on single family homes in June. That was the highest amount of inventory we had in the market. It is now starting to hit that fall downslide. We're seeing the number of listings come down. Some are selling, some are just simply coming back off the market because they couldn't sell. Closed sales is the blue line. So this is number of sales. So again, we peaked out in May. We sold almost 3,200 single family homes then. As of August, we're down to about 2,400. So we're not selling a ton. We still have a lot more inventory. We had about 13,000 homes on the market. About 2,400 of them got a contract. So again, 5-ish months of inventory. Maybe 20% of the sellers in a given month are going to get an offer. So just use that. That's what that means with months of inventory. And you can see it's coming down too. So even though inventory is coming down, if sales are pacing right along with it, you're not really going to feel much difference in the market. What we need to see is listings coming down and sales flattening or even spiking up a little bit. If that were to happen, then you would feel more buyer activity in the market. We have not seen that yet. We will see if the psychology of lowering rates would bring a few more buyers into the market. This is the original price versus the sold price. Please ignore the last set of bars over here. This is September, and we don't have any data for this month yet. So a few sales will create a big spike or big drop. But if we look at the trend as you come out of the year, typically the original price, which is the list price, those continue to soften until you get into a new year. Everybody gets optimistic, buyer activity starts picking up, list prices go up. And so typically we peaked out this year around 530. But what you can see is the actual sold median price hasn't changed a whole lot from April to August. So we were about 455 on average median sales price. We finished out August around 440. So, about 15 grand for the market. That's not a huge number. But what you saw was the price softening of list prices as sellers realized, whoa, I'm not going to be able to get that. Their optimism comes off. The interest rates were still going up. So we saw the list prices continue to soften until we got to the market where buyers wanted to write offers. So it's not that the buyers are necessarily paying a lot less. It's that visually the list prices had to come down. And this is market wide, again, not specific to an individual home, but I think it kind of tells you the cycle of the market. So we're seeing that tighten up, which is good. I think now we're pacing a little better with inventory and sales. We'll have to see how this data trends as we get into September and October. Finally, I think this chart is really cool. This will tell you the story of pre-pandemic, the pandemic, and where we are now. So this is historic sales price trend going all the way back to 2014. So we're past the last housing downturn. Austin got out of that somewhere around 2012 and then started its just steady appreciating climb to where it is now. And pre-pandemic, which is all the way up to about right here, okay, was nice and steady. And I tell people every year, price goes up in the spring, flattens in the summer, goes down in the fall, and then it does it again. It's like a stair step. So prices typically every fall, you can see the second half of every year, prices come back down. That is completely normal because there's not as many buyers buying in the fall. It typically takes longer. But what happens is it ends the year higher than where it started, and that's appreciating. So the market was appreciating. This red line is 5.4%. So pre-pandemic, Austin for a decade was appreciating at 5.4%. If you take that line and just act as if the pandemic never happened, okay, you can see how crazy above that line we got through 2022. From January 2020, our median home price in the market was $300,000. We rocketed up to $550,000, almost, 85%, maybe 90% higher in 24 months. Okay, 24 months. So we almost had 100% appreciation in 24 months when we were averaging 5.4%. Yeah, nobody can afford that. So what happens when you raise rates? Huge fall in the second half of 2022 and early 23. We saw a spring bounce, okay, and then a big fall again because we were still way above trend line. But look at this year. The bounces are getting smaller. Okay. And we're real close. Give it another year, maybe year and a half. we should be right back in line with the trend line. So we're getting very close. And that doesn't even factor in the fact that we had real inflation above a normal trend line. And so that tells me Austin's getting pretty close to stability. I bet if you look at some other markets right now that have not yet had a big price correction, my guess is they're still out of balance. And so Austin has had a big correction, but I think that correction is starting to get back in line with trend line. So if you are a buyer right now, you still have some great tailwinds. You've got a good amount of inventory still in the market, more than we typically would have this time of year. For many years, probably over a decade, we haven't had this many homes for sale as we enter September. You also now have interest rates coming your direction. They're coming down, and there's signs that they'll come down further. If you are a seller, we don't quite have the market we want yet. Obviously, there's still a lot of competition. The buyer activity is still pretty slow, but finally, we're starting to see maybe that light at the end of the tunnel that says the worst of it may be behind us. And we're starting to get back to what may look like this: a stable market. Maybe some light appreciation comes back to this market, maybe next year, but most likely by 2026. I think we'll see the market really be back in a stable position. So, that I think is where we're shaping up as we enter September. I'm very interested to see buyer activity this month and see if we feel it pick up. We ourselves have had some pretty decent buyer activity, but I don't know if I'm alone reflective of the market. But anyways, hope this was helpful. If you want to check out all our videos, make sure to look at our YouTube channel at Ryan Kelly Group. Click that subscribe button. You can keep up with these videos each and every week. And of course, hey, if you know somebody that wants to take advantage of our fall market, whether they're buying, selling, or investing, make sure to reach out to us. We look forward to talking with you. Again, hope y'all had a great Labor Day weekend. Enjoy this week, and we'll talk to you soon. Thanks.